Welcome everyone to Vested Interest. This is Shane, and in this video we will cover our weekly portfolio update. We're going to cover the $1,555 we added in new capital. We're going to cover any options we were in, any dividends received, everything we did in the portfolio this week. So let's get right into it. Starting with options, nothing to speak of there. We did throw out 3 or 4 options plays this week. No one bid on them, so we're going to continue to do that. The market has been pretty crazy. Lately, we've been trying to run options on AT&T, Kroger, SCHD, and a couple of others, depending on what we see and what we like in the week. But we are not getting any biters, and that is the thing about options. I write options, covered calls, or cash secured puts, and you've got to have someone on the other side to buy that option because I sell options, I do not buy options. Now on the other side, dividends, we have had very good dividends coming in pretty consistently to the portfolio. Starting this week with Enterprise Product Partners on August 14th, they paid us $274.84. And we do have the DRIP set on the portfolio, and DRIP just stands for Dividend Reinvestment Plan. And that just means anytime a company in the portfolio, in this case Enterprise Product Partners, pays out a dividend, they get automatically reinvested. So that $274.84 goes right back in and buys more shares of Enterprise Product Partners. I don't have to do anything. And it picked up 8.62652 more shares of Enterprise Product Partners. Those 8.62652 shares add an additional $18.80 in additional capital over the next calendar year. So when you hear people talk about the dividend snowball or compound interest, this is what they're talking about, right? I already own shares of Enterprise Product Partners. Those shares pay out dividends. Right, the 274.84. Those dividends get reinvested, pick up more shares, 8.62652 in this case, and those new shares add additional capital, buying more shares the next time the Enterprise Product Partners pays out. That is the dividend snowball. That is what people are talking about whenever they say that. Now, we also received more dividends on August 15th, total of $302.63, broken up from 2 different companies. First on the list, Procter & Gamble, ticker PG. This is out of the consumer staple sector. And if I didn't mention Enterprise Products is out of the energy sector, but Procter & Gamble paid us $94.50. That $94.50 went right back in and picked up 0.61097 more shares. I have been nibbling on Product Partners, adding a share or two a week here for a while, and I'm going to continue to do so as long as it's under 160. And Omega Healthcare Investors also paid us dividends, $208.13. That $208.13 picked up 5.07397 more shares of Omega Healthcare Investors. And Omega Healthcare Investors is a REIT out of the real estate sector. The new funds from both Procter & Gamble and the shares they picked up added $16.17 in new capital over the next calendar year. All right, back to the first new capital added. We added $1,102.62 on Monday, August 11th. This is also the day we tried to go in and write some covered calls. With those funds, we picked up 2 more shares of Valet, ticker VALE, out of the materials sector. We picked up those shares at $10.24. 13 more shares we added to our Comcast Corporation position. Comcast, ticker CMCSA, is out of the communications sector. Picked up those shares at $31.90. This is one I'm going to continue to add to while it's below my cost basis. Added 2 more shares to United Health Group, ticker UNH, and I'm glad I did because it was announced by the end of the week that Warren Buffett had added this to his portfolio. So this one really shot up well above my cost basis again now. Those 2 shares of UNH at $256.69. And there's 1 more share of Procter & Gamble, ticker PG. UNH is out of the healthcare sector. Ticker PG is out of the consumer staple sector, like I mentioned. Picked up that 1 share at $154.07. And again, I'm going to continue to nibble on Procter & Gamble. I'm probably going to back off UNH now that it's above my cost basis. I think it was back above $300 by the end of the week. But I'm going to continue to add to Comcast. If Procter & Gamble is under 160 next week, I'll probably add another share or 2 there and maybe look at some others. I wouldn't mind adding to Occidental and a couple others. We'll talk about that towards the end of the video. But there's $1,102.62. The new shares picked up added $40.56 in new capital over the next calendar year. And we weren't done. We went back in on August 15th, shouldn't say 6th there, August 15th, which was Friday, added an additional $453.35. And we just added to the 2 ETFs that we buy every single week, regardless of the market. So Schwab Strategic Dividend Growth ETF, ticker SCHD, we added 5 more shares there, $27.32 per share, and added 1 share of Vanguard's Total Stock Market ETF, ticker VTI, picked up that 1 share at $316.76. And again, we buy these every week, regardless of what the market is, regardless of the price. I'm going to add at least 1 share of VTI and 3 or more shares of SCHD. And again, regardless of the price. Now, I'd love to see a big pullback on VTI, the overall stock market, but right now it's really screaming. So I feel like I'm paying a high price, but that's the nature of dollar cost averaging every week. Sometimes you're going to overpay, sometimes you're going to underpay. The idea is over time, you're going to pay about the middle average there, and your shares will accumulate, your dividends will accumulate, and overall your wealth will accumulate over time. Now, the $453.35, the new shares added, picked up $8.85 in new capital. Total invested for the week, $1,555.97. Total additional passive income added with the dividends paid out and the new shares we picked up from the new capital we added, $84.38 in new passive income. Quick run through the portfolio sector weights. Communications makes up 10% of the pie. Consumer discretionary at 3.22. Consumer staples makes up 8.50. Energy slice is at 9.58. Financials is 6.74% of the overall portfolio. Healthcare makes up the largest slice at 17.02. And part of this is because of the run up again in UNH. And if it continues to run up, this may get pretty close to 20%, and we'll back off adding to anything in the healthcare sector. Industrials at 6.32%. Technology makes up 13.61%. It is in second place still for now. Materials makes up 2.26% of the portfolio. Utilities at 3.78%. REITs and real estate makes up 5.87%. I would like to add to VT properties in the REITs and real estate sector, but I'm waiting for a little bit of a pullback under $32 per share at least. I'd love it to pull back under 30. I don't know if it's going to do it, but if it was to pull back under 32, I'm going to add a little bit here. And ETFs makes up the third largest slice of the pie here at 13.09%, and it is eventually going to overtake technology here as well as healthcare eventually, just by the nature of adding to the 2 ETFs, SCHD and VTI, every single week, regardless of the market. Now, what you see over here to the right are the percentage breakdowns that match the pie here on the left, as well as the dollar amount allocated to each sector as well. All right, here it is, my overall portfolio. I do show this every single week, regardless of what's going on in the portfolio. I think it's important for us in this space who are talking about financial investing or finances to show you what we are actually doing. So I want you to see a real portfolio built out over time, the ups and downs associated with holding individual positions, with holding ETFs, how a portfolio grows as you add new capital, as dividends are paid out and reinvested, so that some of you out there who maybe are just getting started can understand, hey, positions do pull back. You can see Comcast is still down 13.5% in my portfolio. Positions do run up. Kroger is still up 53%. AT&T is still up 66.49%. UNH, which was down, I think, almost 20% last week, or 15% maybe, is now up 11%. So that is how quickly things can turn around in the market. Stocks go up and down for a lot of different reasons. Sometimes it's for the good fundamentals, or businesses are getting better. Sometimes it's just for poor news, or there's a war breaks out, or in the case of energy stocks, sometimes even the weather can impact them. There's a lot of different reasons. Sentiment can impact them. Stocks fall in and out of favor. So sometimes just people's opinion of a stock can change its trajectory for a short period of time. And what my job, and I think your job is as an investor, if you are doing your own investing, which I recommend, you don't have to pay someone a fee to invest for you. You know, we can all get on so many different brokerage accounts right on our phone now that we can invest anywhere in the world, sitting at our house, and not have to pay those fees associated with having someone do it for you. You can just consistently dollar cost average into the stocks that you like, or the ETFs that you like. And again, I want you to see that a real portfolio built out over time, so you can understand the ups and downs of a portfolio and what it looks like. All right, here's all the positions in the portfolio in this column. Total shares owned, and all of these numbers will be as of the close of business. I got in on Saturday afternoon and updated all this. Current price, market value here, average cost per share, purchase price. Now, these do include reinvested dividends. Total return, whether I'm up or down, you're going to see it. Obviously, the ones that are in the red mean that I am down in those positions. Percent return, the percent I'm up or down, you'll see it here as well. Green, and the greener it is means I'm up. Red just means I am down. Sector that each position falls in here. Quarterly, monthly, semi-annual payers, you'll see those here. I will update them. You'll see the ones highlighted in yellow. Those are ones that have already raised their dividend for the year. I actually think CB and Comcast have raised their dividend, so I need to get back in there and check that. I don't know why those are showing up white. I believe they already raised their dividends for the year. Let me check that and make sure that's accurate. Next week, I'll make sure that I have all of the updates updated. But I believe these are all the positions that have updated their dividends so far. My yield on cost in this column here, portfolio weighting here. So we saw on the previous slide each individual, or I'm sorry, we saw the sector weightings. This is each individual position's weighting. And I do have a rule in the portfolio. I do not want any one position to be more than 10% of the portfolio. And I don't want any one sector to really run up more than 20 to 25% of the portfolio. We saw that healthcare was about 17%, so it's getting close. And that does not necessarily mean I'm going to sell anything. It just means I'll back off from investing in that sector. Or if a company gets over 10% of the portfolio, I'll back off in investing in that company. That does not apply to SCHD or VTI. If they're 20% of the portfolio, 30%, whatever they end up becoming, I will continue to buy them every single week until I'm done buying and filling out that position. Estimated annual income here, dividend growth year over year here, payout months. And these do, I know some companies slip from month to month, but this is the typical months that they pay out. Right? If a company pays out towards the end of the month and they slip into the following month, sometimes I get that. I'm not going to adjust it. I'm just going to add or have the typical months that they pay out. But I do understand that sometimes a company might slip from one month to the other. Where a position sits at 15% of a 52-week low here, I like to use this column to match my average cost per share. I want my average cost per share to be below where the company sits at 15% of a 52-week low. All right, total shares in the portfolio, 6,882.627 shares. Market value currently of the portfolio, $406,642.31. I think I said last week that I thought the portfolio would bust over the 400,000 mark in the next couple of weeks or month. I did not realize it wouldn't even take another week for us to bust over that mark. But we are over $400,000 in the overall portfolio. Very nice to see. On to $500,000 we go. $359,107.80 of my own funds invested in the portfolio. That does include reinvested dividends. So whenever you see those reinvested dividends, that is included in the purchase price here. Total return, $47,534.52. I am up 13.24%. I do not really focus on this, and I'll say it every week. The only way I lock in this return or this percent gain is if I sell all the positions in the portfolio. I am not focused on the gains because I don't look to sell positions. Now, that doesn't mean I don't sell positions. From time to time, I might move funds around, sell a position to buy another one, sell a position that I think is overvalued. But for the most part, I hold, I buy, and I hold for the long term. That's the idea. And then I collect the dividends, reinvest those dividends, and let those positions compound over time. Portfolio salary currently $1,070.45 per month, per week $247.03, per day at 365 days $35.19, and per hour 8,760 hours $1.47. So we're getting back to that $1.53 that we were at before we did some reallocation here not too long ago. Current yield of the market or my portfolio 3.159. My yield on cost 3.577. And this is what I focus on. That is why it's over here circled in red and underlined. The dividends paid out by all the different positions in the portfolio, and it continues to go up week over week, month over month, year over year as I add new capital, as the positions pay out dividends and those dividends get reinvested, and as those companies raise their dividends over time. And it currently sits at $12,845.35. So getting back to that 13,000 and then beyond, I think we'll get that back above 13,000 here probably sometime in September. Not by the end of August, but definitely sometime in September. And dividend growth year over year, 5.99% currently. All right, that is really it for this one. Let me know what is going on in your portfolio. As you saw, my portfolio is at week after week lately hitting all new highs, just like the market is floating around all-time highs right now. And just because the market is high does not necessarily mean individual positions are high. And just because the market is high does not necessarily mean you should stop buying the market. If you are dollar cost averaging, you should continue to do that week over week, regardless of what the market is, because like I said, the idea behind dollar cost averaging is you don't know and you're not smarter than the market. You're going to pay high prices sometimes, you're going to pay low prices sometimes, you're going to pay average prices sometimes. That's just the nature of dollar cost averaging. That's why I do that with VTI and SCHD. So you can see that other positions I invest in whenever I feel like they're undervalued based on my criteria and my discounted cash flow analysis. That does not necessarily mean it would meet your criteria, right? You may not want to invest in the same positions I have in my portfolio. Maybe they don't meet your time horizon for retirement. Maybe they don't give you the dividend yield that you want. Maybe they don't give you the dividend growth that you want. Maybe you just don't like the companies. That's the nature of individual investing. You should be investing based on your criteria that you have set up for yourself, your timeline to retirement, all of that, not blindly copying me or anyone else out there in the world. And I know I reference Warren Buffett from time to time, not necessarily that I copy him or any other investor, but it is nice to see whenever I have bought a position and then it comes out that he has bought a position too. So it does kind of validate what I'm doing. UNH, for example, I was buying, a month ago and have been nibbling on it, and it just came out that he was buying it as well. So it's not that I was copying him, it's that it just happened to work out that I was buying something that he was buying. So it makes me feel good when that happens, because I know he's smarter than I am, a better investor than I am, and probably has more research tools and definitely has more employees than I do. So it validates what I'm doing to myself. Not that it matters, but it does make me feel good whenever I see something like that. So I'm not going to add to UNH probably anymore, but I am glad to see that Warren Buffett was also adding to it. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. And don't forget to hit that notification bell. Drop a comment down below. Let me know what you think of the video. Let me know what's going on in your portfolio. What did you add? Are you selling anything? Are you waiting for a drop on anything? Would love to hear from you. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thank you for stopping by. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel, a certified financial advisor.